What's up, everybody? Back for another video today. Now let's talk about money. How can we make this money passively? Or how can you get money to work for you instead of you going to work for money? We're going to talk about that today. We're also going to talk about phone farming earnings and how you can potentially take those earnings and make them grow over time. So I got my phone pulled up right here, and this is my Ulado account. And I just did a cash out today for $65.59. And that's going to go to my PayPal account. I also have been doing the $2 cash outs on Perk and transferring them right to my bank account. So one thing you can do, and this is what I've been doing, this is a project of mine, I've been doing a lot of research on it. I wanted to invest in stocks, but I don't want to take all the risks that come involved with it. So I found a method or a strategy that I really like. Now, there's two different strategies from what I've learned watching videos and doing research. There's the growth strategy, where typically you buy low and sell high, and you try to you make your money off of selling the stocks at a higher price. But for me, I work a full-time job. I just don't have time all day to monitor these stocks, and it just seems really stressful to me. And I've did some growth stocks, but as soon as I started losing money, I didn't want to lose all my money, so I pulled out, did some more research, and I found a better option, and it's dividends. So what you're gonna do is you're gonna take your money you earned off your phone farm, and you want to find a company, a good company, not these penny stock startups, or not these stocks that are volatile, where you see the high peaks and valleys. You want something that's pretty stable, but also something that's going to grow over time. The word they use is blue chip stocks. Is a company that's been around for a while. I mean, some of these companies have been through recessions already, and they have proven that they can grow and keep paying their dividends. So we'll take a look at one that I actually picked up, Coca-Cola. Everybody knows what Coca-Cola is. They've been around for such a long time. Founded in 1888. That's gotta say something right there. And they got a dividend yield. We're gonna keep this simple, okay? I'm still learning myself, so I thought it would be a great idea to tell you guys what I learned, and without being too technical with graphs and stuff like that. I'm using Robinhood because for this strategy, I don't want to pay commission sales like you would on pretty much almost every other platform, because I'm going to be buying the stocks little bit at a time as I go along. So on Robinhood, we can check out our dividend yield, and it's 3.23. Now, there's a couple key factors in my strategy. Now, again, I'm not an expert. I just told you, like I said, I'm learning about this. So make sure you do your research before you start buying stocks. Make sure you buy a good one and all that stuff if you want to follow along with my strategy. But again, realize that there always is going to be a risk with the stock market. So no matter what you do, just do your research. Put your money in something that you feel good about. I feel pretty good about Coca-Cola, so I ended up buying a share. They got a 3.23 dividend yield. Now, the dividend is a percentage of the amount that you've invested that you're gonna get back, either annually, quarterly, which is probably the most prominent, and then there's also some that actually do monthly. But typically, it's gonna be quarterly. So every quarter, you're going to get a dividend from your money. And if you look at the history of this company, and we're just using this for an example, do your research, find some companies that you like, companies that's been around for a while, that can make it through this. Now, they've been up since, I got a 5-year here, January 24th, they were, let's see if I can get this, $38.84 a share, and then they've gone up to $47.69. within the past 5 years. So you have this constant upwards growth. I mean, it's not going to be like millionaire overnight, like Bitcoin was or something like that. But you won't have to deal with the volatility of that. And I like that peace of mind. So if I'm going to put my money into a company, I want to put it into something that has that, that brand name that everybody knows about. There's a couple other stocks that I was taking a look at that I want to add to my portfolio. One of them being, I was looking at Microsoft. Check out their 5-year growth. So they started, I wish I knew about this stuff before I started, $36.81 a share. And that was in January 24th of 2014. And they've gone all the way up to $106.20. So that's a 188% of growth alone. And on top of that, every quarter or whatever, you're going to be making your dividends. They got a 1.7 dividend yield. Again, look at this company, 1975. They've been around for a while. They're not going anywhere. You know what I mean? These are the kind of stocks that you want to look for with this strategy. So I'm looking for these companies that have been around for a while. Another one I picked up was AT&T. Here it is. A little bit cheaper on the price, $30 a share, but we're not so much worried about the price. As you're building your portfolio, you'll see some of the stock prices. Now, this is another strategy I found out too. As you're building up your portfolio and you already got, a wide variety, you want to diversify. Don't put all your eggs in one basket. Spread them out. As some go down, others will go up, and you're going to win no matter what. Plus, you're always going to get your dividends. So I've been looking at these dividend stocks. This is a 5.7, founded in 1983. Everybody knows who AT&T is, and I don't think they're going to go away anytime soon. So just keep that long-term investment mindset. So past 5 years, they've been down 9%. Big whoop-de-doo. The flip side of this, if a stock does go down and it's a prominent company, and you can look at the max stats too, that means it's a great buying opportunity, because now you're going to have a cheaper price that you can get in on that stock, and then eventually it'll start going back up again, So dividend yield 5.07, great dividend yield. Now there are a lot of other charts you can look at when analyzing a company. There's like how much debt they got, their price per earnings ratio, this number right here. But I'm not going to get into all that. I just wanted to keep this simple. This isn't for the seasoned guys. I mean, I'm not seasoned myself. I'm just getting into this. This is like a project of mine. I've already got a 401k with my work that I'm putting into. But I also wanted to build up a portfolio with a brokerage account where I can get some dividends and take those dividends and actually reinvest them and then just compound that money. So I've already made this money off of my phone farm, and now I'm just going to take that money and I'm going to make it work for me. And this is as passive as it gets. The dividends go right to your account, and then you can either choose to withdraw or put it back into stocks. So that's one reason I really like Robinhood, because me personally, I'm not going to be putting in thousands of dollars at a time. It's just going to be little by little, and I don't want to pay those commissions. I do have a link that I'm going to put up for Robinhood. You get a free stock when you sign up. I also get a free stock too for referring you, so it's a win-win situation, and you guys can get started building a portfolio. But yeah, this method is really low risk compared to like a growth method where you're just going to dump tons of money into a stock and then just cross your fingers and hope it skyrockets. So I really think you guys will like the passive part of it as far as getting dividends. I know I'm really excited about it. I really want to keep this video like a series, and I'll give you guys frequent updates just so you guys can see how my portfolio is doing. But this is where it all starts, from square one. Like I said, I only got about 200 something dollars in here, but let's watch it grow. If I would suggest trying this, it's not a bad idea, and you can really compound your money. Like the holy grail, I think, would be like, just imagine having $1 million in your portfolio, and let's say you get average 5% back. So you're looking at $50,000 a year, and that's just in dividends. Now just imagine how much more money you could have if it would grow with growth, you know, like 10%, 20%, who knows, you know. Some of these companies have grown quite a bit. Like we were just looking at Microsoft. That was in 5 years, that was like almost 200% in growth. So just imagine, you know, use your imagination on that one. But that's gonna do it. I just wanted to show you guys this method. I think it's a really great idea, and I'm trying it myself, and I'll keep you guys updated on how it progresses. And like I said, I'm not an expert at this. I'm learning at this too. So if you guys have any suggestions for me as far as dividend goes, I don't want to do any growth stocks right now. I want to build up my portfolio. If you guys know any really great dividend stocks that you guys like to use, let me know in the comment section. And otherwise, I'll keep you guys posted on this account and how it's going. But until the next video, thank you so much for watching. If you like this and you want to keep an eye on how my portfolio goes over time, don't forget to subscribe. Give me a like if you like the video, and I'll see you in the next video. Have a good day.